Hey, it's Clay, and this will be a video chart on ticker symbol USEG. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to this time frame. I think it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I've done this one, I think, before, but it's been a long time if I have. However, after today's price action, this chart's looking pretty sketchy. I don't know how else to put it. I mean, yeah, it's bullish because it made a nice move up, but it also had a pretty deep pullback. So yeah, it's just pretty sketchy. That's really the best way to summarize it. But what I want to do is just kind of focus on a single level, and that's going to help us kind of give us an idea of whether or not this thing is actually bullish or if this thing's got a chance to be, is basically just a pump and dump. So in my mind, 90 cents can really help us out quite a bit, because let's just kind of stop and think about things. So let's say that the price comes down to 90 cents, and then after that, breaks down through it, and then just continues on to the downside. What would you have in this situation? You would literally have the price going right back to where it was right here. And not to insult your intelligence, but price movements with true power are not going to go back to where it all started. So if that were to happen, that being a break and then a continued separation below 90 cents, at that moment in time, that essentially puts the chart on pump and dump status, meaning the price made a great move, yeah, but then within a very short amount of time, the price all of a sudden is back to where it started. That, by definition, is a pump and dump. I'm not saying that's what's going to happen, but that's one possibility in regards to 90 cents and why, in my opinion, it's an important level. On the flip side, though, let's say the price comes down here, does something like this, and then starts to work its way back upwards. Well, what would you have in this circumstances? Well, you'd have a set of lows here. You'd have lows down here. If you picture each of these as stair steps, well, hey, now you would have overall stair steps progressing in the upwards direction. And that's a sign of a big picture bullish move. Now, I get it. If you're a day trader and you bought up here and wanted to sell within, 10 minutes, then yeah, you don't care about these stair steps. So I'm definitely making these comments based on more so a big picture point of view. But that is a possibility also. So in my mind, 90 cents is definitely kind of that vocabulary defining section, meaning is the price making progress, aka staying above 90 cents, or is the price going back to where it was, which would be the whole bearish pump and dump thing. So keep an eye on 90. In my mind, that's going to be a very revealing level. So let's see what the price decides it wants to do right around that area. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.